So, the first known use of options was in ancient Greece, around the 4th century BC, and they were used to speculate on the olive harvest. There was a well-known academic at the time who was called Thales of Miletus, and he was a philosopher, mathematician, and astronomer. And he managed to predict that there would be a huge olive harvest in his region just by studying the stars. He recognized that there would be a significant demand for olive presses, so he really wanted to corner that market. The problem was he didn't have enough money to own all of the olive presses around where he was. So instead, he paid all the owners of olive presses a sum of money each. And by doing that, he secured the rights to use them at harvest time. Lo and behold, come harvest time, he was right. It was a huge harvest. So he resold the rights to the olive presses to those who needed them, and he made a really good profit. By doing this, Thales had effectively created the first call option, and he used the olive presses as his underlying security. He had paid out for the right, not the obligation, to use the olive presses at a fixed price, and was able then to exercise his options for a sizable profit. This is the basic principle for how all call options work today. Fast forward to the 17th century in Holland. At that time, tulips were incredibly popular, and they were considered to be a status symbol among the Dutch aristocracy. This popularity spread into Europe and then throughout the world, which led to a dramatic increase in the demand for tulip bulbs. At this time, calls and puts were being used in many different markets, including the tulip market. Tulip growers would buy puts to protect their profits just in case the price of tulip bulbs went down, and tulip wholesalers would buy calls to protect against the risk of the tulip bulbs prices going up. Now, with the increased demand in tulip bulbs, the value of tulip bulb option contracts increased as a result, and then a secondary market emerged, which enabled anybody to speculate on the market for tulip bulbs. The problem was, many individuals and families in Holland invested heavily in such contracts, and they used all of their money and even borrowed against their own assets, such as their houses. Tulip bulb prices went up and up, and they could only go up for so long before eventually the bubble bursts. Prices had risen to a point where they're unsustainable, and the buyers started to disappear as the prices began to plummet. Many people were hit hard, and ordinary people had lost all their money and even their homes. This led to the Dutch economy going into a deep recession. It was obvious that some sort of regulation was needed to force investors to fulfill their obligation on their option contracts. From now on, options suffered with a terrible reputation. In many parts of the world, they were banned and made illegal, and it wasn't until the 19th century that things began to change. Step up Russell Sage, an American financier. He set in place a controlled option trading system, which is used to this day. During the late 1800s, brokers and dealers started to place adverts to attract buyers and sellers of option contracts with a view to brokering deals. The idea was that the interested party would contact the broker and express their interest in buying either calls or puts on a particular stock. The broker would then try to find someone for the other side of the transaction. The trading of options was certainly increasing by this point, although the lack of any regulation was putting off a lot of investors. In 1968, the Chicago Board of Trade decided to set up and create a formal exchange for the trading of option contracts. It took 5 years to do this, but by 1973, the Chicago Board of Options Exchange began trading. For the first time, options contracts were properly standardized, and there was a fair marketplace for them to be traded. This removed the huge concerns that many investors still had about options not being honored. So, over 2,000 years after Thales had created the first option call, the trading of options was finally legitimate. If you enjoyed this video and want to see more option trading videos, head on over to our website at wheeloptiontraders.com. Here you'll find our Options Wheel Strategy Trading video course. We have over 50 videos and counting, from the basics of understanding and trading options through to using the wheel strategy to get the most out of your options trading. We also have an amazing options wheel strategy tool that you can download. It tracks all your trades in real time and provides key insights to help you with your options trading decisions.